Welcome to today's episode of the Deep Dive Credit Podcast, presented by Elite Credit Solutions. We are your trusted partner in affordable credit repair, proudly based in Tampa, Florida, and dedicated to serving clients across the entire United States. Join us as we explore the intricacies of credit management, share expert insights, and empower you with the knowledge you need to achieve your financial goals. Get ready for an enlightening journey into the world of credit. Let's dive in.
So today, we're going to look into something that affects, all of us. It's how we use our money.
Okay.
Specifically, our savings and money market accounts.
Right.
Ever heard of Regulation D?
I have.
Most people haven't.
Yeah, I would say so.
But it's been quietly, shaping how we access our funds for decades.
Yeah, behind the scenes.
Yeah.
It can really trip you up if you don't know about it.
Exactly. So today, our mission is to decode this mysterious Regulation D.
Okay.
We'll uncover what it is,
Okay.
how it's evolved,
Right.
and most importantly,
Okay.
what it means for you.
Gotcha.
So let's start by going back in time a bit.
Okay.
Back in the 1930s, after the chaos of the Great Depression and those devastating bank runs,
Oh, yeah.
the government stepped in to try and restore confidence in the banking system.
Right.
Part of that solution was Regulation D.
Regulation D was all about stability,
Okay.
making sure banks had enough cash on hand
Okay.
to meet customer demands. That's where those reserve requirements come in.
Okay.
Essentially, for every dollar you deposited, the bank had to keep a certain percentage
Right.
in reserve,
Okay.
unable to lend it out.
Gotcha.
It was a safeguard
Right.
to try and prevent widespread bank failures
Right.
that had crippled the economy.
Yeah, crippled the economy.
Yeah.
So it was like a safety net for the entire financial system.
Yeah.
But how does that connect to the limits on savings account withdrawals?
Well, as part of this push to stabilize banking
Okay.
and encourage, responsible financial behavior,
Mm-hmm.
the government introduced the infamous
Oh.
6-transaction limit on savings accounts
Okay.
in the 1970s.
Okay.
This rule basically limited the number of convenient withdrawals you could make each month.
Oh, okay.
Things like transfers or payments made by phone,
Yeah.
online,
Yeah.
or through a debit card
Okay.
all counted toward that limit.
So basically, the government was saying, hey, use your checking account for your everyday spending
Right.
and leave those savings accounts for well saving.
For saving, yeah.
It's interesting how they used regulation to try and shape people's financial habits.
Totally, yeah.
Absolutely.
Yeah.
And for decades, that system worked relatively well.
Yeah.
But then came the digital revolution.
Things changed quickly.
Right. Suddenly we could transfer money between accounts with a few clicks.
Yeah. Super easy.
Pay bills online.
Yep.
Shop with debit cards linked to savings accounts. The lines between checking and savings started to blur.
Definitely.
It's like the old rules couldn't keep up with the new technology.
Yeah, exactly.
So did the government just scrap Regulation D altogether?
Not quite.
Okay.
In 2020, the Federal Reserve acknowledged that things had changed,
That was
and they eliminated the federal mandate on the 6-transaction limit.
interesting.
This doesn't mean you can now make unlimited withdrawals
Right.
from your savings account.
Okay.
Without consequence, though. Banks can still choose to enforce their own limits,
Okay.
and importantly, charge fees if you exceed them.
Okay. So it's a bit more complicated than just no more limits.
Right, exactly.
But why would banks even want to limit our access to our own money?
Right.
I mean, wouldn't they want us to use our accounts as much as possible?
Yeah, good question.
Yeah.
There are a few reasons.
Okay.
And it's not just about being difficult.
Okay.
Banks actually have a vested interest in encouraging you to save.
Right.
Limiting withdrawals from savings accounts helps reinforce that purpose.
Okay.
It's also about cost efficiency.
Okay.
Each transaction,
Mhm.
whether it's a transfer or a debit card swipe,
Okay.
costs the bank money to process.
Right.
So limiting those transactions can help reduce their operating costs.
I can see that it's like a balancing act for the banks.
It is.
They want to encourage savings,
Yeah.
minimize their own costs,
Uh-huh.
while also making sure customers have reasonable access to their funds. It sounds like there could be some unintended consequences
Yeah.
to eliminating the federal limit, though.
It's possible.
I mean, could this lead to banks raising fees elsewhere
Yeah.
to make up for the lost revenue?
It's a great question.
Yeah.
And it's certainly a possibility.
Yep.
We've already seen some banks adjust their fee structures
Mhm.
in response to the changes in Regulation D.
Okay.
It really underscores the importance of being an informed consumer.
Right.
Understanding the rules of the game can help you avoid those unnecessary charges.
Yeah.
And make sure you're getting the most out of your bank accounts.
Absolutely. It's all about empowering yourself with the knowledge to make smart financial decisions.
For sure.
So let's get practical.
Okay.
What are some actionable tips for navigating this system
All right.
and avoiding those pesky fees, even if your bank still enforces transaction limits?
Well, first and foremost, I would recommend opening a checking account for your everyday transactions.
Okay.
This way, you're not constantly dipping into your savings account
Right.
and risking those fees.
Okay, that makes sense.
Mm.
Keep a dedicated account for everyday spending
Yeah.
and one for savings.
Yep.
Anything else?
Another crucial tip is to maintain a buffer in your checking account.
Okay.
Having a cushion for those unexpected expenses means you're less likely to need to transfer money from your savings in a pinch.
So being proactive and planning ahead can really save you money in the long run.
Definitely.
Yeah, it can.
Exactly. And here's a tip that might surprise you.
Okay.
In-person transactions are your friend.
Sometimes.
Even if your bank has strict limits on electronic transfers,
Yeah.
withdrawals or transfers made in person at a branch usually don't count towards those limits.
Right.
It's like a little loophole in the system.
Yeah.
Love a good loophole.
Yeah, too.
It's almost like going back in time to the days before online banking.
Yep.
But what about those of us who prefer to manage our finances digitally?
Okay.
Any advice for us tech-savvy folks?
Absolutely. If you're making electronic transfers.
Try to bundle them together instead of spreading them out.
Okay.
This way you'll minimize the number of transactions you make and
Ye-
stay within any limits your bank might have.
Smart move. That's a simple change that can make a big difference.
Yeah.
What about those pesky accidental overdrafts?
Yeah.
I know those can trigger transfers from savings
yes.
and lead to fees.
Yeah.
You're right. Setting up low balance alerts for your checking account can be a real lifesaver.
It can be.
It's like having an early warning system
Uh-huh.
to prevent those accidental overdrafts
Yeah.
and the fees that come with them.
Totally.
Those are all fantastic tips.
I think so.
I'm already feeling more confident about navigating this whole Regulation D thing.
Good.
But before we move on, I have one more question.
Okay, go ahead.
Is there a way to know for sure what our bank's specific policies are?
Mm-hmm.
It seems like there's still some gray area.
You're absolutely right to be cautious.
Yeah.
And the good news is that financial institutions are required to disclose their specific policies regarding Regulation D.
Okay.
So the best thing you can do is to check your account disclosures
Okay.
or reach out to your bank directly to get the full picture.
Gotcha.
Don't be afraid to ask questions.
Knowledge is power, right?
Absolutely.
Now that we've covered the basics of Regulation D
Mm-hmm.
and how to avoid those pesky fees,
Right.
I'm curious to learn more about its evolution.
Okay.
In part 2 of our deep dive, we'll explore some real-world scenarios
Okay.
that illustrate the impact of Regulation D
Right.
on everyday banking.
Sounds good.
Stay tuned.
We'll be right back.
Welcome back to our deep dive into Regulation D.
Okay.
Now that we have a grasp on what it is
Mhm.
and how it came about,
Yeah.
let's shift gears and explore how these regulations actually play out
Okay.
in real-life scenarios.
Our world, yeah.
It's one thing to understand the rules in theory,
Right.
but seeing how they impact people's lives can be really eye-opening.
Right.
So can you paint us a picture?
Okay.
What are some situations where those transaction limits on savings accounts
Yeah.
could really throw a wrench in someone's plans?
I think a good example would be like a small business owner
Okay.
who suddenly needs to like cover an unexpected repair
Okay.
or make payroll.
Right.
You know, they might need to transfer money from their savings really quickly.
Yeah.
And if their bank has those strict transaction limits in place,
Uh.
they could be stuck.
It's easy to see how that could be a major headache.
Definitely.
For a business owner, every minute counts when you're trying to keep things running smoothly.
Yeah, for sure.
And it's not just businesses.
Right.
Think about someone saving for a down payment on a house.
Okay.
They might need to make multiple transfers from their savings account
Right.
to cover things like closing costs
Yeah.
or new furniture.
Uh-huh.
Those transaction limits and fees could eat into their hard-earned savings.
Exactly. It's a good point.
It's almost like being penalized for trying to reach your financial goals.
In a way, yeah.
You mentioned earlier that some banks have adjusted their fee structures
Mm-hmm.
in response to the changes in Regulation D.
Right.
Can you give us some examples of how that's playing out?
Sure. Some banks have started charging higher monthly maintenance fees
Right.
for savings accounts
Yeah.
if you don't meet certain balance requirements.
Okay.
Others have introduced new fees for excessive withdrawals or transfers.
So it's like a bit of a shell game.
Kinda, yeah.
The 6 transaction limit might be gone,
Yeah,
but banks are finding other ways to generate revenue
right.
and manage their costs.
Exactly.
That's a good way to put it.
Yeah,
It really highlights the importance of shopping around
it does.
and comparing different banks and their policies.
Uh,
Don't just assume they're all the same.
no, definitely not.
It sounds like knowledge is our best defense against those hidden fees
It is.
and unexpected charges.
For sure.
Speaking of being informed, let's talk about those loopholes we mentioned earlier.
Okay, the loopholes.
Are there ways to access your savings
Mm-hmm.
without triggering those transaction limits?
Right.
Or incurring those fees?
There are.
Okay.
Remember how we talked about in-person transactions?
Right.
Not usually counting towards those limits?
Yeah.
That's one of the easiest ways to avoid those fees.
Right. Sometimes the old school methods are still the best.
They are.
Any other tricks up your sleeve?
Another option is to use ATM withdrawals.
Okay.
While technically electronic,
Okay.
they're usually not subject to the same restrictions
Okay.
as online transfers.
So another way to sidestep those potential fees.
Yeah, exactly.
It's all about understanding those little nuances.
For sure.
It seems like Regulation D is kind of a moving target.
It can be. Yeah.
The rules are always evolving,
Yeah.
and it can be hard to keep up.
Yeah, it's a lot.
What advice would you give someone who's feeling overwhelmed by it all?
I think the key is to stay informed and don't be afraid to ask questions.
Mm-hmm.
Read those account disclosures carefully.
Yeah.
And if something's unclear,
Yeah.
reach out to your bank and ask for clarification.
Right.
Most importantly, remember that you have options.
Yeah.
If you're unhappy with your bank's policies,
Mhm.
don't hesitate to shop around for a better fit.
I love that it's about taking control of your finances
is.
and finding what works best for you.
Totally.
Regulation D might seem complex,
Yeah,
but it doesn't have to be a source of stress.
I agree.
With a little knowledge and effort,
Uh-huh.
you can navigate the system with confidence
Yeah,
and make sure your money is working for you, not against you.
exactly.
Well said.
Thank you.
Now that we've explored the real-world impacts of Regulation D
Yeah.
and how to avoid those pesky fees,
Mm-hmm.
let's dive into some of the finer points of this regulation in Part 3.
Okay.
We'll uncover those specific types of accounts it applies to
All right.
and explore those clever loopholes that can help you access your funds
Yeah.
without triggering those transaction limits.
Sounds good.
Don't go anywhere.
We'll be right back.
Welcome back. We've been on quite a journey through the world of Regulation D,
We have.
exploring its history,
Yeah.
real-world impacts,
Mm-hmm.
and even some ways to, outsmart those pesky fees.
We've been dizzy.
We've covered a lot of ground, but there's still more to uncover.
Always more.
Let's get granular
Okay.
and talk about the specific types of accounts that fall under Regulation D.
Right.
Is it just savings accounts we need to worry about?
Well, not exactly.
Okay.
While Regulation D is often associated with savings accounts,
Uh-huh.
it actually covers a broader category called transaction account.
Transaction accounts, what are those exactly?
So think of your everyday checking account
Okay.
or a NNOW account,
Okay.
which stands for Negotiable Order of Withdrawal.
Okay.
These are designed for, transactions,
Right.
paying bills using your debit card,
Right.
those sorts of things.
Oh.
They typically don't have the same restrictions on withdrawals
Okay.
that you might see with savings accounts.
So even though the Fed lifted that federal mandate
Right.
on the 6 transaction limit,
Uh-huh.
it's still relevant for those traditional savings and money market accounts, right?
Precisely.
Okay.
And here's where it can get a little tricky.
Uh-huh.
Even within the realm of savings accounts,
Okay.
there can be variations.
Right.
Some banks offer high-yield savings accounts
Okay.
that might have different rules.
So reading the fine print is always a good idea,
It is.
even if you think you know the general rules.
Yes, never assume anything.
Right.
Each bank has the flexibility to set its own policies
Okay.
within that broader framework of Regulation D.
Speaking of flexibility,
Okay.
in previous parts we talked about those loopholes,
Right.
ways to access your savings
Yeah.
without bumping into those transaction limits.
Right.
Can you remind us of some of those strategies?
Sure, one of the simplest is to go old school. In-person withdrawals or transfers.
Okay.
These usually don't count toward those electronic transaction limits.
Right. It's like stepping back in time to a simpler era of banking.
Yeah, it is.
But let's be real.
Okay.
Who always has time to go to the bank?
Not many people.
What about those of us who live in the digital age?
Right. Good point.
Yeah.
Another good option is utilizing ATM withdrawals.
Okay.
While they're electronic,
Okay.
they're not typically considered convenient transactions
Okay.
in the same way that online or phone transfers are.
So another way to sidestep those potential fees.
Exactly.
It seems like there's always a workaround if you know where to look.
There often is.
Exactly. It's all about being savvy and strategic.
It is.
If you anticipate needing frequent access to your savings,
Yeah,
you can plan accordingly.
absolutely.
It's like playing a game of chess with your bank,
It is a little bit.
knowing the rules
Mm-hmm.
and making smart moves to stay ahead.
Right.
And ultimately, it all comes down to this. Regulation D, while complex, is manageable.
It is.
By being informed and proactive,
Mm-hmm.
you can ensure your money is working for you, not against you.
That's the goal.
Couldn't said it better. We've really dug deep into Regulation D,
We have.
unpacked its history,
Ugh.
decoded its rules,
Yep.
and even uncovered some clever ways to navigate its complexities.
Hopefully that's helpful.
Absolutely. And remember, if you're ever in doubt,
Okay.
those account disclosures are your go-to resource.
They are.
And don't be shy about reaching out to your bank for clarification.
No ask questions.
It's your money after all.
It is.
You have the right to understand how it's being managed.
For sure.
That's a wrap on our deep dive into Regulation D.
This has been fun.
We hope you found it informative and, dare we say, even a little bit exciting.
I hope so.
Until next time, keep learning,
Keep learning.
keep exploring,
Yeah.
and keep diving deep into the world of finance.
Sounds good.
That wraps up another insightful episode of the Deep Dive Credit Podcast, brought to you by Elite Credit Solutions, your go-to resource for affordable credit repair across the United States. We appreciate you joining us today, and we hope you found the information valuable and empowering. If you're ready to take control of your financial future, don't hesitate to reach out to us at 813-317-6776. Additionally, don't forget to like today's podcast, follow us, or subscribe to stay in tune with future updates. Thank you for listening, and until next time, keep striving for excellence in your credit journey.